Good morning. It's Jonathan Barratt with the Water Report. That's the week ahead report where we discuss what we feel are going to be some of the major themes up and coming for this week. This week beginning March the 22nd, Monday, March the 22nd. Okay, I guess the main themes at the moment, inflation, interest rates on the move. We have inflationary concerns in India and China. India just increased their interest rates by 0.25% last Friday. China's looking also to calm down its markets, and they have inflation as well. The current rate's about 2.7 in China and about 9.7 in India. So obviously those emerging economies where we're getting a significant amount of growth and demand for commodities are actually coming from India and China. So that's going to be a little bit of a concern that we do hold because we've got economies which are moving ahead, reducing stimulus, cutting back on expansion by putting interest rates up. Then we've got economies like in America and obviously in Europe where are actually they've got benign inflation. Numbers in the States the other way from CPI, also numbers this week out of Britain, will also show that the economies, there's not a lot of light, not a little bit of flame behind those two major economies. And that, to me, is a concern because, in one hand, you've got those emerging economies which are going full steam ahead, which are doing very well in terms of their growth forecasts, and they're having to hold back. And on the other hand, you've got those economies which have that concern that they perhaps might double dip when they withdraw those stimulus packages, which we're actually seeing, and they've got no inflation. I always think it's a bit of a balance to have two, a little bit of inflation, and interest rates were relatively moderate, or moderate enough for that economy to actually be able to handle it. And in the absence of that, which we have in the Western economies, that is a concern because that gives that potential to perhaps double dip. And I think that is something which we've got to focus on. One thing that might actually cause it to double dip is a concern once again from Greece, where that sovereign debt issue and that contagion is actually coming back to the fray. And that's something which we've really got to try and focus on a little bit, and we'll certainly keep an eye on that. Okay, so let's just have a quick look at what's out this week and what are the themes we're going to follow in terms of some of the trading. Okay, the main things here, I guess in terms of economic numbers, just in quickly going through it, I actually felt the data we had out on Wednesday, the inflation data out of the States durable goods orders out in the States would be some of the most important ones. But here, there's not a lot to get our teeth into on Monday night. Tuesday, there's a little bit there. We've got some retail and CPI out of Britain, but that's probably meant to show the same we saw in the States. Obviously, existing home sales are very important there in America. We've got that normal weekly data we have in oil. Wednesday, durable goods orders. Now, this is something we're going to focus on because that's going to show us whether or not that economy is reacting to the stimulus packages. Hopefully, we'll see a positive number there. So that, to me, is good. We've got Department of Energy stuff as well. So that's pretty much about it on Wednesday. Thursday and Friday. Thursday and Friday, we've got a little bit of data there, but nothing too much. So I basically feel it's going to be the most important ones will be Wednesday night and GDP on Friday as well. So so that in itself, I think we'll just have to hold out to. Of the trades which we're actually looking at the moment, not a real lot on the horizon, but one thing I want to spend a bit of time on is that US dollar index. That US dollar index looks like it has broken up from the top there. And you can start to get a sense to feel that that's looking quite better bid. Let's see, it'll probably head on up to that 83. Let's see whether or not it does break that area. But at the moment, if that dollar index does remain better bid, then that will certainly dampen enthusiasm for some of our commodities. So keep a close eye on that one. If that's the case and the US dollar does look better bid, that'll also cause that Aussie to come under pressure. In terms of a trading risk, a low-risk trading opportunity, something to look at. I don't mind buying some US dollars against that Aussie at the moment. I haven't pulled the trigger on it, but I'll certainly let you know via Twitter or Facebook when I do. But we're getting pretty close to that. So keep an eye on that US dollar. I think that's important. As to the local markets, the Dow, I think this week, look, it's right up here, and we've had a little bit of a weakness here in the Dow. And I think if it takes out that 10,600 level, or even 10,500, then we could be in for about a 200 to 300 point decline. So I think if there, I'd be slightly cautious about taking on long equity positions at the moment. I really want to see that Dow break through that old high last week at around that 10,800. And if I see that, then I'll be a lot happier that things will be moving on ahead. So, yeah, so let's just see a little bit cautious note there on equities. On the soft commodities, not a real lot to report there other than we've got world ending stocks which remain relatively well bid. Look, just continue to focus on the need for a low here. And there it is there, you can see it. Not a lot to report in terms of a trending market yet, but I think opportunity exists around that 460, even down that 450 level, particularly for wheat. Corn is a similar story there. On the corn side, you can see probably chances are a little bit lower. Be careful on a break through that 380, but I'll probably expect it to see a little bit lower. So I guess as you can see with the war report this week, the focus will be inflation in the US dollar and also a resurgence of what's happening in Greece. So I think we should stay pretty close to what's happening there. Keep an eye on that US dollar. It does look a little bit better bid, but as we know, it's been in a range for such a long time. We haven't broken out. But we're only feeling via our technical ideas that it has a higher propensity to break out to the top side. Be cautious on equities. I want to see more of a defined break to the top side. And I think I'm looking at a trade. I think I might have a quick look at that Aussie. Aussie, see what happens. We've got a small trade on copper and also sugar, but nothing that's really going to make it or break anything. We just want to have that interest in there. That's about it from us. I hope you have a good, healthy trading week, and we'll talk to you next week for the war report. Have a good day.